Good morning and welcome to the Chart of the Week video with me, David Madden. Today's date is Friday the 3rd of July 2020 and the time is just gone 11:45 British summer time. And this week's Chart of the Week is the Euro Swiss. We can see here that Euro Swiss was in a very aggressive downtrend for most of 2020. In fact, in mid-May, it went on to hit its lowest level in 5 years. So it gives an indication of how aggressive the downward trend was in. That was partially down to the fact that the Eurozone has been hit hard by the coronavirus crisis, and there's various different stimulus packages in the pipeline. On the other side of the divide, the Swiss franc is a well-known safe haven play. So while traders were in risk-off mode, they're happy to plough funds into the Swiss franc. So hence the major decline in Euro Swiss. But since then, from mid-May through to the early June, we saw a decent rebound. Markets don't move in straight line, so after that multi-year low, we did claw back some of the ground that was lost. But if we look at the price action over the past month, really, we can see a nice series of lower lows and lower highs. So we could be now look to fall back into the wider downward trend. We can see now that the price action of the last couple of days, the range has been low. There's a very long wick on Wednesday's candle on the 1st of July. Seems to me there's a bit of indecision of which way the market's going to go. But keep in mind, it's been in a downward trend for the last 3 weeks. We can see here that the 100-day moving average, this yellow line here, which comes into play at 1.0611, acted nicely as support a couple of days ago on Wednesday the 1st of July. So and we can see that metric was acted thereabouts important as a late area of resistance and also support in late May. So that metric appears to be important. If we can hold above it, there's a chance that we could look to kind of press on higher and continue the upward trend from May onwards. But if we decide to break below it, that could pave the way for further losses, and it could take us back down towards the late May low in at 1.0576, this area here. And if you have a decent break below that, there isn't really much else to look out for except for the 105 area down around here. But keep in mind, things would probably have to get pretty bad for us to get back to those 5-year lows. On the flip side, if you can hold above the 100-day moving average, if it continues to act as support, we could see the market retest the recent highs just shy of this area here, just shy of 1.07. And if you go beyond that, we could be heading towards this red line here, the 200-day moving average at 1.0747. And notice how the 200-day moving average acted nicely as resistance here. We had the lower low, we had the lower high, we had the rebound into it, hit off the 200-day moving average, and then hit another lower low. So that metric actually had resistance in the past, so it makes it likely that it will do so in the future, although there are no guarantees. And if you do hit above that, we could take us up towards the kind of 108 zone here, and then if you go beyond that, we could then be looking at retesting the highs of early June. That's all for this trading session. Stay safe, have a good trading week, and good luck.